Ever found trading so interesting? Don't worry if you don't have any knowledge in trading. AlgoBulls comes to you as an AI-backed trading platform. It's called AlgoBulls, and this is truly my exclusive algo trading partner. AlgoBulls provides ready-to-use algo strategies on their expert marketplace, and this makes my trading journey super easy. This has helped me use trading as the new form of investment. Look, AlgoBulls helps you choose a trading strategy based on the size of your investment and risks involved. If required, you can customize the strategy in many different ways. Also, you can build your own strategy with the AlgoBulls API or ask the AlgoBulls expert team to code it for you. If I didn't find this, I would never know that trading is easy and efficient, and I wouldn't have the success I do. You ready? It's easy. Sign up on the AlgoBulls platform. Select an algo strategy from the marketplace. Opt for a monthly subscription to get the best offers and discounts. Connect with your broking account. Start your trading. That's it. You also gain a huge benefit being attached to AlgoBulls if you are a market expert or strategist,
Thanks everybody for waiting by and joining us during the live markets. So today we people have a panel discussion with Mr. Aadit Shah, and Aadit is a risk specialist and he's a fund manager at Algo Solutions. Algo Solution is a unique wealth management concept which I have heard very lately in the market. And Algo Solution not only allows you to diversify your investments just by investing it in capital markets, but Aadit has developed few of the strategies on our platform where Aadit has put in his risk management expertise onto those strategies and actually came in with algorithmic trading strategies, which makes trading just as simple as investment. And today's in today's discussion, we people are going to have about algorithmic trading and starting fresh in 2022. So for this fresh start, I would like today me and Aadit, both of us are going to discuss about algorithmic trading systems and how we people can actually we can start fresh in the year 2022 with regards to algorithmic trading and with regards to automating investments. So let me just give you a brief introduction about me too. So I'm Yash Srivastava. I've been a trader since 2017 and I've been trading in the markets, doing intraday trades, as well as I've been an investor, I started investing at the age of 17, and I've been a discretionary trader till 2019-2020, and after 2020 the pandemic hit. I've turned into a full-time trader where I used to do discretionary based trading, but post that I discovered the rule-based trading system and the systematic trading system, and I completely switched on to algorithmic trading. And currently I'm working in AlgoBulls as an algorithmic trading facilitator as well as a partnership manager in AlgoBulls. And what my main expertise are, so apart from conducting webinars, you guys must have seen me on a lot of webinars with AlgoBulls. But apart from that, I also work on few of the strategies in the market, and I trade full time in the market with a fully fledged system based, and I also create few of the strategies too. So that's a bit about me and a bit about Aadit. So without any further ado, we people would be actually starting this session. We people would be actually starting this panel discussion on algorithmic trading with Aadit. So Aadit, a few of the questions. So like rather than questions, I would just want to know what Algo Solution is all about and how is algorithmic trading coming into the picture?
Well, let me share my screen first. Please, you have to allow me before that.
Yeah, I'll do that. Yes.
Hold on a second. Yes. Well, welcome to my market space, Yash. This is everything that I have put myself through for the past few months now. So your question was what is Algo Solutions, right? Past few months I have spent researching on the AI platform in our country, the online algorithmic trading, services that are being provided from every single, distributor, every single company there is, such as yourselves. In the end, I chose yours because, the platform is much more user friendly. Plus, it's very interactive and very well managed, I would say. In my research, I came across 13 companies such as yours, okay, and more than 1100 strategies, okay, and 1100 is a very, very big number. Do you remember that statistic that came out a few weeks ago that said over the past decade, only there have been around 74 companies that have given an annual return of 15%, okay, on the Bombay Stock Exchange? There are 4,700 listed companies there. Okay. So one out
Yes.
of every 100 companies, okay, would have been a multi-bagger of sorts, would have been, truly profitable. Now that's a needle in a haystack. And that haystack is made up of numbers, calculations, okay, research, analysis, what we call fundamental analysis. Okay. So finding that one stock would have been extremely difficult for anybody, including us. We understand what fundamental analysis is. Still, it would have been very, very difficult, correct? The similar thing happens here on this platform of yours on algorithmic trading in our country. So many strategies, some good, okay, some decent, some not at all worthy, okay, and that number of not at all worthy, it outweighs both of the other categories combined. And people who do not have the knowledge of how algo trading works, they can get stuck up, they can lose their capital, they can just be caught up in that mess of terrible strategies. So I found it to be a worthy, cause for my presence. And I created Algotech solutions for the only reason that I can provide my clients with strategies that I would use myself. Strategies that are actually worth, putting your money in. If you do that on a regular basis over a period of time, almost certainly you wouldn't lose money. So the past 3 months, I have spent researching all of those strategies, coming up with my own strategies. And I created this white label on your platform. It is very unique to myself, and nobody else has, the control over it as I do. And these are my choices. Okay. If you ask me to put my money, my own hard-earned money in any one of these strategies, I would be very comfortable to do so. And that is saying something. Should I take you guys through the platform first? Yeah.
I think so. We can do that post. We can do that in the other part.
Wonderful.
Yes. So as we guys were talking about, the solution of algorithmic trading itself, and Aadit Shah actually showcased this platform, which is algotech.algobulls.com, and this is in collaboration with Alice Blue, wherein we people do have a collaboration with Alice Blue, wherein we people could directly log in with Alice Blue and actually start our seamless algorithmic trading system. So Aadit, I think so you can stop sharing the screen now. Yes. So as we guys were discussing, Aadit, with respect to algorithmic trading, as we people know, today's derivative markets, after SEBI imposing the margin rules, and now it has now we were thinking that okay, options are going to become much more expensive for retail traders, but we still could see more and more participants. But when I actually interacted with option traders in the market, and I actually found out that retails who are getting into futures and options, they have 2 or 3 of the major problems. First is to actually understand options, you would need to study option Greeks, you would need to study gamma, theta, open interest rate, actually study on patterns, charts, to actually determine the right part, to actually determine what the market trend is going, making a right view in the market. This was the first problem, to actually gain this much kind of knowledge in the market, and actually gain this much knowledge about the option derivative contract itself. And the second problem was, if some people took up some courses on technical analysis, learning open interest rate, and doing and creating and actually doing certain things. But the second problem which I found out was most of the people said, okay, if even we studied everything, we don't have time from morning 9 a.m. to 3 a.m. because that is the peak working time, including for me. 9 a.m. to 3 a.m. is the peak working time. So the second question was, okay, if I even learn everything, I don't even have time to determine what's the right entry time and what's the right exit time, because I can't be on charts all the day. And the third point was, okay, after me having a full-time job and after me even having a knowledge, me having the capital plus knowledge, but lack of time. The third thing was, if even I'm having knowledge and if even I decide to quit my full-time job to start full-time trading career, which in India is actually a lot of overhyped that, okay, yeah, I'm going to become a trader. So the third point was, even after studying so much, we people do face heavy losses in the market. Maybe we people could make around 50% or 60% ROI in a month, but over the period of second or third month, all this ROI goes down because of one huge big loss. So Adit, I want you to actually address these three major questions of retail traders on how they can actually get into systematic based fund management for themselves. Since you're a fund manager and you are an algorithmic trader plus you are a strategy creator, so I want you to address this question, that how a retail trader like me and everybody in this webinar could actually manage funds effectively, efficiently, managing their risk and doing the position sizing part.
Okay, there are a lot of questions in that one statement, and all of them, we need to address every single one of them before anybody enters the market. Okay, the first I'll begin with, the possibilities of a retail client, retail person in this market, in the algorithmic trading market. Okay, it is very much possible. Yeah, every single person can do that. There is no restriction. The markets, the systems, they do not discriminate between the retail HNI or anybody like that. Okay, anybody with decent capital, that is the only requirement that stops people from entering this space. I would say a capital, okay, on my platform, the platform you just visited, it costs 6,500 every month just to maintain those systems to me. Okay, and that is excluding all the profits and gains that we should have been generating, which we are not. My company. Okay, you must make sure that you have enough capital invested that you can cover at least 6,500 every month. Okay, and if you consider that you can make a maximum around 10% every month, okay, month on month, which happens most of the times, but usually you end up in losses as well. It changes from strategy to strategy, the way we were discussing before. So a decent capital is what you should have. Okay, expect that you can earn 4% every month. And let that 6,000 be 4%. So you should have around 2 to 3 lakhs in capital, according to what I believe. If you have 2 lakhs or 2.5 or 3 lakhs in capital, that is being traded every day on these platforms, almost certainly you are you are bound to end up making terrifying profits at the end of the year. They will be really very handsome. Okay, and it won't be anything that traders see. Okay, believe me, I have been a trader just as yourself since I was a very since the young age of 16. I have seen people make and lose all of their capital, and there is one reason behind that. The way you mentioned, you can make 60% in a month and still be negative 20% by the end of the third month. That is very much possible. All of us here, we have seen that happen. The only way, the reason that happens, Yash, is human sentiments. There is nothing more. That hope, recover ho jayega, paisa ban jayega wapas. Okay, that one hope, it really just takes everything down for us, and it's very much understandable why that happens. So we need we discussed that before when we were planning this strategy, this platform, and we understood the only way that will happen is to remove humans from the process of decision making at all, completely. Okay, and that is what that is what this platform has provided us. Okay, that human sentiment, that human emotion, Okay, it doesn't matter if I was loss making, I will still exit it. And it doesn't matter if I see more potential, okay, the system will still exit it. It is not greedy, it is not fearful. Okay, it knows when to enter, it knows when to exit. It is completely data based, it is based on calculations. Okay, it is highly sophisticated, it is highly complex. And in the end, when all of these factors they come together, okay, it would beat any human over a period of time. It doesn't matter how good that trader is, how experienced he is. Over a period of time, a decent strategy would definitely outweigh and beat any person.
Yes. So since now the markets are going live and we people could see Nifty's movement being really stagnant and stagnant, and we could see market making a sideways movement today. So me as a trader, where like I'll tell you, usually the concept of trading in India is like I'll tell you, when I interact with traders and when I interact with retail people, retail investors who are turning into traders. So what they expect from intraday trading or maybe swing trading on derivative contracts, they expect 1% return on a daily basis. So it is 1 plus 1 plus 1 plus 1, which is on a 20 average days of trading sessions. It is 20% return in a month. But we people tend to forget that market कुछ देता है तो कुछ लेता भी है. Right. So we people neglect the loss and we people think, chalo, if I'm unable to get 1% today, but I feel I've picked the strike price today. I've picked this call right today. So I'm going to continue this and then I'm going to carry this forward for tomorrow. I'm going to carry this till that time, till the time premium decays and premium becomes zero. So this is what happens in retail. This is what happens when we people get newly into trading, because we people are so confident about our studies and we people are so confident about our analysis on the underlying instrument. But at the end of the day, underlying instrument is a derivative instrument which is derived from the value of Nifties. When it comes to index derivative, it is derived from Nifty and Bank Nifty. When it comes to equity derivative, it is derived from equities price. So we people tend to forget that yes, of course, the demand and supply could change anytime. So the studies could go wrong. But what we people need to focus over here is to square off at whatever rules we set. So suppose Aadit's strategy has certain rules set that no loss more than 500 to 1,000 rupees a day on a capital of 20,000 rupees, and no profit greater than 5,000 rupees to 10,000 rupees a day if it's an if it's an intraday based strategy on 20 to 30,000 rupees of capital. So these are certain kind of rules we people set in our strategy, that based on certain market studies, this is when it is going to take an entry and this is when it is going to take an exit. If it meets the parameter, it does take an exit. If it doesn't meet the parameter, it doesn't. And the market reacts sideways. It is very important for us to make it an intraday strategy. I'll tell you why intraday. I just received this question over the from the audience, that why AlgoBulls or why Aadit Shah's solution only has intraday strategies, wherein we people see multiple strategies being developed for weekly option expiry or maybe calendar spread strategy, which is on monthly option expiry. So I'll tell you why intraday trades or why intraday strategies are there on our platform. There are a couple of reasons. First reason is the gap up, gap down risk. So today Nifty, so suppose today Nifty is around 16,500 rupees. I have a call of 17,000 per strike price. And tomorrow market tomorrow there is some huge sentiment in the market, and we people see FIIs pulling out their money, like what happened on Thursday. And we people see retail traders getting a bit scared, and we people could see DIS outflow of funds too. So over here, market, rather than opening at 16,500, what was the last close price, market would directly fall down. It will open at 16,200 rupees. I have incurred a loss of 200 rupees on the day one itself. And this is the reason why there are only intraday trades, because on a daily, this much points of movements won't happen. But when it's a positional trade, you need to calculate the premium decay, you need to calculate the theta calculation and calculate the volatility in the market. And this volatility calculation, premium decay, and multiple topics, this kind of multiple studies are there in the market. That's why, for a reason, we people have kept specifically intraday trades on our platform, so that retail traders don't incur much of a losses in gap up and gap down scenarios. Also, there is not much premium decay is one of the biggest enemy of an option trader. Biggest enemy, because whenever we select a strike price, we select the premium where we bought in. Maybe it might be the right entry price, maybe it might be the wrong entry price. But when we people see premium decay coming in, that's where Adit Shah has mentioned that, yeah, our emotions come into the picture and we tend to hold this waiting for some magical movement. But after all, markets are based on demand and supply, so there's no magic going to happen in the market. You got to square off your position, cover up your losses as soon as possible to go get into the next trade. After all, life is also all about next step and the next life. So yeah, Adit, apart from that, when we people talk about fund management or maybe portfolio management side, and you have been into the traditional side of portfolio where you have been building amazing portfolios for your clients in the retail market for actually their investments, swing trading part, and etc. I just want to know, what is this concept of neo fund management where you're integrating algorithmic trading and helping them make safer returns on consistent basis? So I just want you to explain this neo fund management concept which you are working around.
Okay, yeah, yes. One of the principal characteristics of algorithmic trading is per instrument. Okay, you can have one strategy running on it, on any marketplace, be it yours or any other marketplace. It's systematically impossible to run multiple strategies on one instrument. From one instrument, I mean one script. It can be Nifty, Bank Nifty, or any single script in our cash segment. So it depends upon us now that how do we differentiate? How do we deploy our capital to make the most efficient returns that are possible? If my capital size is in multiple lakhs, in tens of lakhs, okay, I'd be very, very, spectacle of making returns via buying options. I know that it is possible. Nifty trades around 16 to 17 lakh units every week. That in itself is, hundreds of crores. Somebody's buying equities, okay, Nifty worth of hundreds of crores at the money strike price. So it's not impossible to, deploy 10, 20, 30 lakhs via buying Nifty options. But honestly speaking, I would be very uncomfortable buying options with, that kind of capital. At the same time, if my capital is very small, assume it's 2 lakhs, 3 lakhs, 4 lakhs, I wouldn't be able to sell a lot of options. Maximum I'll be able to sell 2 options intraday. Okay, 2 lots intraday, my apologies. So
Yes.
even that would give me very little return. A maximum return of 1500 or 2000 maximum every day per lot. That is not a lot of money. 4000 rupees is not that high. While speaking of option buying with 4 lakh rupees, buying in decent strategies that we have placed on our marketplace, we can very well expect 10, 20, 30, on good days even 40 to 50,000, while losing, let's assume 2.5% maximum in a day. So the reward is compared to the risk is what we must look into. What neo investing, that's what it's all about. It's about finding the most efficient way of deploying your capital via diversifying, be it in equities, be it in the MCX, be it in the FNO market, futures and options, both equally. So that's what it is all about. It's about deploying efficiency, effectiveness to generate and beat the market. That's what this is all about.
Absolutely. And Adit, when we people talk about this, a follow-up question on this. So you tend to actually hedge the position in the options market, is what I have understood. So suppose if I have Reliance in my portfolio and I feel that, okay, Reliance current movement is going to go down, but I already hold that share and I'm expecting a long-term returns on this. So for short term, what I would do is I would actually short Reliance in the future market, or actually, or I could take a put option for Reliance for the certain amount of months. So is that something which you're, is that something what you're doing it for your clients?
So in personalized portfolios, we do provide that service here. But now we should keep in mind that not every stock, okay, Reliance is a very unique example, as in the futures are also very liquid. Okay, in some, in the futures segment, the liquidity in our country, it hasn't been up to the mark yet. You must have noticed there can be a difference. Okay, difference of in the in the bid and ask price, and it can lead you to losses in the longer run. It definitely would do that. Put options, buying puts, yes, we do suggest that to our clients, but even that, it it stands for a very small a very small segment of clients. The reason being the Greeks, okay, they affect the delta and the gammas, they affect it in the beginning of that the money strike price. It's not very profitable, but yes, you can do that. Yes.
Absolutely. And this is how you positions, and this is how you do the position sizing for your strategies. And this is how you actually, this is how you do the risk management for your strategy. I just wanted to understand how you came into the, how did you come into the factor of risk management, position sizing part, and wanted to understand how you have built your strategy using this strong fundamental principles of risk management onto your strategy. And as we see your strategy on your solution, which are like very well risk managed, wherein clients don't face much of losses. And I just wanted to understand from AlgoBull side as well as from the Alice Blue side.
Okay, we have built this entire platform over the past few months surrounding the core principle of risk management. Yes, if you remember in the beginning, you had mentioned how we can make 50-60% in a month and still be negative by the end of the next few months.
Yes,
it has happened. It's nothing to be ashamed of. It happens to everybody. My principal concern was that both the situations shouldn't occur. Okay, you shouldn't be up 60% in a month, because that sort of return, you'd be taking a lot of risk, and I absolutely would never suggest that. At the same time, you should never be losing so much of your capital in a matter of few months, because again, you would have been taking very risky strategies, very risky moves. Okay, we should we need in your example, I would suggest we need to curb on both the ends, because it's very serious to me, it's very important to me to preserve your capital here. I do not expect you to make returns immediately. Correct. You can make
yes,
you can recover everything you lost in a few days. We have seen that as well happen in the markets, but you shouldn't lose so much that you don't stand a chance tomorrow. Okay, the markets will be here tomorrow, we all know that, but I do not know if you will still be. my
absolutely.
job my job is to ensure that you are still here tomorrow when the markets open. My job is to ensure that over a period of time, you beat the risk expected return, that is 15% in our country, risk adjusted return, my apologies. And most of the traders in our country, okay, they make maximum 35 to 40% return. Nobody goes beyond that. Even 35%, it's considered extraordinary in 2 years of in 2 to 3 years. So my job is just to ensure that if you do your job diligently on our platform using our assistance, you should be able to beat the markets in every sense. That's all that I'm concerned with, and that's all that I have focused for the past few months.
Absolutely. So on the so coming on to that question, I also wanted you to address what is the concept of drawdown to retail traders. So we people see straddle, strangle, calendar spread strategies, and we people see few of the option buying strategies wherein they buy at multi-leg strategies in option, wherein retail multi-leg strategies are getting very famous in retail traders these days, wherein they buy a call as well as they buy a put, and whichever the direction market moves in based on based on certain parameters, they exit one position and they keep on entering. So what would be an ideal drawdown for a strategy which you would want to sell, which you have set for your strategies, of course, and what you would want to actually say retail traders about drawdown, which they should work around with?
Okay, your drawdown should be well, it's a very tricky question to answer just as it is here. It depends upon the returns that it provides as well. Okay. Up to some extent, you can take greater risks if the reward you feel is disproportionately higher. Okay. Per every unit, for every beta of risk, okay, the returns, if they keep on increasing, you can still consider it. But after some point, okay, there has to be a saturation point. You cannot lose 70% of your capital in the hopes of making, let's say, 300% return. Okay, to most people in this room, I know that it sounds, very it sounds like a wonder, a dream, a 300% return. Trust me, it has happened. It happens all the time in algorithmic trading, because intraday traders, they can make that much every day. The best of the best on luck. So doubling your money in a day, it has happened. So your risk, it should be very smartly adjusted. Okay, it should be it should be sensible. You should not become very greedy. It should be highly monitored at every moment, every trade. You should understand your risk appetites. You should understand what you are ready to accept. How much loss you can bear in a day, how much you wouldn't flip out, how much would not ruin your day. Uh, for salaried people, losing 20-30,000 in a day, okay, that's a matter of a lot of angry words. That shouldn't happen. Okay, so
It's
that
a
is the core
matter of
concern.
it's a matter of 15 days pay for a salaried person when they're coming in with a risk appetite, or when they're coming in with a drawdown strategy of almost 50-60%, which means on a 30,000 capital, it's a loss of 15,000 rupees, which is almost their 5 to 6 days salary, which is going to which they are actually paying the fees to the market to actually learn something new about risk management in the market. Am I correct?
That is, you put it very well. I couldn't have done a better job.
Yes. So yeah, when we people talk about trading, so we people have heard this from a lot of people in the market that yeah, Rome was not built in a day, as we people see, we consider, we relate this to investments, wherein we people make systematic investments into multiple stocks, mutual funds, bonds, corporate deposit, and diversify our investment solution. Apart from that, we people have a second concept of Hiroshima and Nagasaki was destroyed in a day, which means the trading is the only solution from where you can generate consistent alphas in the market by determining what the position of the market is going to be on daily basis. Now, what you have done in your platform is you have combined both the concepts together. Like you have made trading so simple that that it is almost sounding like an investment. So can you tell me, how do you do the risk profiling of the client, and on what basis or on what kind of risk appetite you actually suggest them the strategies? Because you might be having HNI clients, you might be having few of the retail clients too, and you might be having institutions to backing institution to trading with you. So I wanted to understand, how do you do the risk profiling for them, and how do you recommend them this much customized, tailor-made solution or investment product / trading product to them?
So there are multiple parameters that go into deciding that here. Okay, it's the same for anybody, be it an institution, be it a retail investor, but all of these parameters, they need to be considered before you invest, or before you take the positions on their behalf. The first one has to be their capital. Okay, institutions do not trade in the same way retails do. Okay, if your capital runs in multiple lakhs, okay, you cannot be buying options. Okay, it's important, it's just not suggested for anybody. Okay, similarly, when your capital is very small, you cannot be expected to sell options, because that wouldn't make you a lot of money either. So there has to be a middle way. Okay, so it's my job to understand what they want. Okay, it's my job to suggest them that based on their capital, based on their risk appetites, there can be investors with, let's say, 10 lakhs or 15 lakhs in investment, which they can risk for greater returns. at that point, maybe we can consider buying options, just because his risk appetite is greater. Or at the same time, there can be, that retail investor who has very little risk appetite, 1,500 bucks a day on an investment of 2 lakhs, that is around 1%, 0.6% to 7.5%. We can consider selling options for them as well. So it depends on person to person. It is a handcrafted fabric for anybody to wear. It has to suit your personality, your style, your investment ideas, your ideologies. So considering all of that, anybody on my platform can, they can either personalize it themselves or they can ask for help.
Absolutely. And on your platform, I could see retail strategies plus few of option trading and option buying strategies too, and option selling strategies too. So tell me, what brought you to this? What brought you to this kind of diversification of multiple strategies? And how are you diversifying? And how are you actually helping them diversify into different strategies and generate maximum returns, or maybe safe, or maybe not safer, but risk manage returns using multiple strategies? Like, how do you do the management part?
It depends upon the capital again. Usually we prefer most of it going into options. Okay.
Okay.
If the capital is greater, we prefer more options. The reason is option selling. Okay, you can very easily put in 50 lakhs, 70 lakhs. It doesn't really matter, correct? I have to just sell 70 lots of Nifty or something like that. A market where it trades hundreds of thousands of lots every day, 70, 80 lots is not a big deal for the market. Plus the strategies in options on my platform, I have noticed that option selling is much more safer than any other instrument. Okay, be it the MCX market or the cash segment, the maximum drawdown is very little. So we usually prefer a maximum portfolio. Okay, a major part of the portfolio going in. Okay, and the second one, if there is still greater capital remaining, we still think about futures. Okay, the MCX market, and then we think about cash. So a small part, a very small part, I would suggest 20% of the total portfolio. We divide it, we distribute it into 2 or 3 cash instruments, and then over a period of time, usually they come through.
Absolutely.
So the return, the percentage of distribution, it would be something like this year. It will be 50%, 50 to 60% options.
Okay.
10% would be the MCX. 20% would be equities, cash, and 10% would be cash on hand.
Okay, 10% is to manage the drawdown faced from any of the segment. Am I correct?
Yes, 10% is also to manage the volatility of the day. In worst
Absolutely.
case scenarios, the volatility can, it can just shoot up the prices. So we keep that much aside for a rainy day.
Absolutely. And I was just reading a research paper yesterday, and I was also part of panel discussion at Markets League yesterday, where people were talking about the volatility index, India VIX. So what are your views on India VIX relation with the option instruments, or with relation to your strategies?
I myself, I used to be an option seller. Okay, yeah. So volatility did not affect me a lot. Okay, it affects the option buyers much more, in the sense that the prices can shoot up or they can fall. So they are the ones who stand to lose the most. For option buyers, if I talk about, yes, it's very important. It's a big deal in many ways here. So they have to be, they have to look if the volatility is a lot. Okay, they don't buy. Okay, if it's very low, they buy, they don't sell. So volatility affects both sides of the pond. It affects the option buyers also, not to the extent it affects the option sellers, but yes, it does. And as for the option buyers, okay, they must be on their toes when the market is very volatile. No questions asked. Okay, if what we have seen, what we saw a few days ago, 1,000-point move happening every day. Okay, something we have rarely repeatedly seen before. The option buyers and the option sellers, they would have to be on their feet at all moments. Any compromise there and would have led them to great losses here. Well, it really is very important. You should, if you are an option seller, you should always look at the volatility and the open interest. If you're an option trader, my apologies.
Absolutely. And last week has been an amazing week for me, so I won't comment on that. Apart from that, I also wanted to ask you, like, what is the ideology? What is the ideology behind your risk management strategies, and what it takes to actually create this kind of strategy? Any kind of suggestions or any kind of knowledge you want to share to retail traders or someone getting newly into trading or someone who's an existing trader but has faced myths of losses? So any kind of suggestion you want to give retail traders based on your strategy and based on how you do it you do it for you and your clients?
Well, the strategies that I go for, okay, the strategies that I have opted for my marketplace, they have one thing in common, that they are proven strategies, Yash. They have been back tested for multiple years. They have been, they have been looked after. We have carefully coded those, and we have back tested. We have put our own capital in trading those, those strategies, and in the end result, okay, that decides whether the strategy is something worth having on our marketplace. You'll find that there are not only our strategies on that marketplace. There are strategies from AlgoBulls, there are strategies from other strategists, extremely talented people, extremely experienced, well known, and worthy people. So it's a combination from it's a product that has come after testing and guidance of many well wishers that we have met in the industry, and those who have provided their assistance to us.
Absolutely, absolutely. So I would want to understand a closing note from you. So like suppose I'm a retail trader, of course I'm a retail trader, and then many of our attendees joining us today, all majority of them are retail traders. So I just want you to give a closing note on how they can start this new year, which is going to start from tomorrow onwards, 2022, with a note of making smart investments or smart trading decisions.
So would you mind if I share my screen?
Absolutely.
Okay. So what you see on your screen is what we call a retail marketplace. Okay, retail marketplace, it usually dives into cash and the MCX market, the commodities market. Okay, that's what it usually goes into. So on your screen, you can see the natural gas futures. Okay, my apologies. Okay, yes. So this is a strategy card. It shows you everything you must know about this strategy. Since the day it has been running, it has generated an ROI of 204%. That would mean if I had invested 100 rupees at the beginning of the strategy, I would have made today that 100 would have become 304 rupees. Similarly, okay, the person, okay, who would have lost the most till date, if he had invested 100 rupees at the worst possible time in this particular instrument, he would have lost 13.9%, 13.9 rupees of that investment. That is what this risk profile here shows. Similarly, when you go to our premium marketplace, this is where things start to get crazy. Here there are 3 strategies. Okay, not more. Again, I said there were very few strategies that we found comfortable. We were comfortable sharing. Okay, it would have given 500%. That is something that is absolutely mind-boggling. We have been through these codes. We have been through the strategy cards. It's very complex. It's highly sophisticated system that has come together with the assistance of your team and the person making this. And in the end, it has just paid off wonderfully for everybody. Yes. So the third strategy card, the H1I marketplace, it delves in option selling. Okay, I would be comfortable with placing even if I had 5 crores in just any of these three cards. I would not have, had second thoughts. I wouldn't have questioned the ability of these cards to make me money. That's how confident I am. Okay. And this is the power of algorithmic trading, because I don't have to look into it afterwards. That's how much I trust these strategy cards. So during the day, even if there is a loss, okay, I do not have to visit it for months once I get it running. Okay. And over a period of time, I assure you, you'll make a lot of money using any of these codes, any one of these 11 strategy cards that I just showed you. You would not regret it. You have my word, Yash.
Absolutely, Adit, absolutely. And what kind of plan you have, and what kind of plans do you want to offer to Alice Blue customers and our attendees who are joining us for this webinar? So
So
how
at the
can they
moment,
access this?
okay, so I'll share the link with you very, very soon. So to all of our clients, yes, you already have the link. If you wish
Yes, yes.
to go
I'll
forward
share
with
it across.
sharing with them. Um, so to all of our customers, at the moment, AlgoBulls, it offers just one plan, that is 6,500 every month. Okay, trust me when I tell you, we don't make a lot of money. If you visit the actual marketplace, it's much more expensive for the same products that we are providing here. The end goal was for our customers to, for the retail customers to get something that will make them money. Yes, that's all that we cared for. And, I think we have succeeded in doing that. So at the moment, it costs 6,500 for our clients. Very, very soon, okay, we'll come up with 6 monthly and annual packages, which you can directly opt from my website, and there you pay a 20% discount. That's what you'll get, a flat 20% discount for whatever purchases you make there. Okay, again, I mentioned in the beginning that it's about the number of strategies. It's all about the trades you take, the number of trades you take in algorithmic trading to come up profitable. So giving 6 months to 1 year, okay, you have my word, no matter what happens, you will not lose money. So those are the three packages, three plans that will be available to our clients soon enough. Okay. My only word of advice would be that have enough capital. Okay. If I had to suggest, it would be minimum 2 lakhs. If you have that much, if you are able to, come up with that capital, you'll find nothing better than this particular marketplace here. I assure you my word, I have been through all the others, and this is what I have come up with after visiting and taking the best portions of every single website.
Yes. So now I would like to present the screen, and actually now I would like to come to my favorite segment where I want to actually present one of my favorite strategy from Aadit, Aadit's marketplace. So the strategy has been built and developed by Aadit itself. But prior to that, I want to guide you guys on how you guys can actually log in and actually start your algorithmic trading journey in this fresh year of 2022. So as I've dropped the link, you guys just need to type algotech.algobulls.com. So this is the website from where you can directly log in from where you can directly log in to Aadit Shah's official strategy, from where you can directly access exclusive strategies handpicked and selected by a fund manager, as well as you can access Aadit Shah strategies exclusively on the platform. Since all of us are Alice Blue customers, we guys have two options. Either we guys can sign in with Alice Blue account, or we guys can sign in with our registered mobile number and by our registered password. If you're new to this platform, you guys can just click on sign up, fill up your name, number, and email ID, and you can directly sign up. Since I already have an account with AlgoBulls, I'll just click on login, and it'll take me to the solution. From here, I can directly verify my Alice Blue account by entering my year of birth, and it would add Alice Blue account to my platform. Apart from that, as Adit was explaining you the strategies which are there, as Adit was actually explaining you the strategies there on the marketplace. So I would like to, actually explain you what I would like to explain you. I would like to explain you the platform which we people have built for Aadit Shah and how this platform has been moving around. So this platform is divided. So like on our dashboard, you could see three of the segments. So over here, we people have three segments, which is retail, premium, and HNI segment. And on the retail segment, we people have strategies related to cash intraday or cash futures or commodity strategies, wherein they come in with low risk appetite as well as they come in with low risk to reward ratio. But all as you could see, the risk on the strategy is just 8.9%, which is the maximum drawdown anybody could face on the strategy. Over here, the strategy by Aadit Shah, which is on Reliance intraday, the maximum drawdown in the strategy is around 7.84%. Apart from that, we have a premium segment wherein we people have option buying and option selling strategies which are not multi-legged. So we here this strategy comes in with comparatively moderate risk to moderate return ratio, wherein the strategies come in with a decent enough drawdown of around 17 to 25 to 50% too, depending on strategy to strategy. But on Aadit's marketplace, we people have strategies below the drawdown of 20%. Over here, you could see three strategies by Vaibhav, Dinesh Nagpal, who are one of our pronounced strategies. And the third strategy is by Algotech Solution, which is by Aadit Shah itself. Apart from that, we have an HNI marketplace where we people have option selling strategies, which are multi-legged. And over here, there are multiple buy and sell calls generated on daily basis. And over here, as Aadit was saying, options selling is more profitable than option buying. So this is the reason why Aadit Shah was saying so, because you could see 93%, 96%, 54% of return on a daily basis, which was yesterday. I would just like to go to the trade book just out of curiosity to actually show you how this returns were generated, because when the premium erodes, over here you could see the multi-leg execution moving in a day and generating a return of 1,975 rupees on a daily basis. In just where the entry price was at around 40 rupees and the premium got eroded and it came to around 1.35. So this is the power of option selling when we people enter into the market and actually see how the markets are moving. Apart from that, now I would like to present one of my favorite strategy, or one of the strategy which I like the most in today's market, is something in our premium segment, which is developed and created by Aadit himself. And the strategy is smart trade writer. So I'll give you a brief introduction about the strategy and what the strategy is all about. So the smart trade writer requires a capital of 1,55,000 rupees, and the recommended duration to trade in this strategy is approximately 180 days. Now talking about risk factor, so the maximum risk in a day which you're supposed to face is of 2,000 rupees on a capital of 1.5 lakh approximately, and desired profit on a daily basis is approximately 7,000 rupees. Apart from that, you can see the strategy is written by Aadit Shah. The strategy's name is Smart Trade Writer. It is running on NSE Index, and it is running on Nifty Bank. Apart from that, you can see candle intervals 15, which are few of the parameters on the basis of which retail traders get decent amount of understanding on how the strategy has been performing. To know more about the strategy, you can go out on detail segment and you can see how the strategy actually takes trade in the market and on what basis the PNL management of the strategy is being determined. Similarly, now many of the people have questions. Okay, so we people saw the strategy, we people also like the strategy, but we people want to see the results, because whenever we people invest in mutual funds, we people invest in stocks, we see the fundamental reports, we see the fact sheet. Similarly, in algorithmic trading, we people show the track record, and this track record is called the backtesting report of the strategy. And this backtesting report is something which gives you end-to-end insight or end-to-end information about how the strategy has been developed and how the strategy has been performing over the period of 17 months. So there's a backtesting report of our strategy which gives you end-to-end insight on how since how long the strategy has been moving, And the strategy has given you an ROI in INR of 3,30,000 rupees and 555 rupees over the period of 17 months, giving an ROI of 213%, 213.26% over the period of 17 months. And over the period of the 17 months, the maximum drawdown or the maximum loss anybody has faced in the strategy was of minus 3.8, which is approximately 4%, wherein you could see the maximum loss faced by the strategy. And number of trades the strategy took was around 737 trades. Number of wins were 401, and number of lost trades were 336, which means number of win trades are higher than lost trades, which brings us at an hit ratio of 54%, wherein hit ratio of anywhere above 50 or between 50 to 60 is considered to be a really good hit ratio in the market, wherein you are being profitable 50% of the time in the market. That is what hit ratio says. An average trade on daily basis is 3, which means there is a regularity of trade being taken place, and number of short trades are more than number of long trades. And the maximum gain the strategy has given over the period of the strategy has given in a day in this 17 months was of around 7,000 rupees, and the maximum loss was of around 4,264 rupees. And this is a multi-leg strategy. Apart from that, average profit and average loss a day is around 1,700 profit, and average losses of around 1,100 rupees. So when people ask about return, how is the strategy performing now, and what kind of returns it is generating? So in the 17 months, the strategy has generated a return of 212.85% over the period of 17 months. In previous 30 days, the returns were at minus 1.18%. And the previous 2 weeks, it again bounced back because the selling sentiment was huge, and it managed to recover the minus 3% and took it to 0.45. And the previous 3 days, it has been moving to minus 1.94%. Now, to see end-to-end insight about the strategy, we people to maintain 100% transparency on our platform. We people publish all the trade books, which are whatever the trades are being placed in the market. So over here, you could see these are the 3 trades which have been placed in yesterday's market, which are an option sell trade in the market. And over here, you could see what was the sell price, what was the buy price, and what was the PNL at the end of the day. Again, you could see what was the sell price, what was the buy price, and you could see the PNL over the end of the day. And you could see how these 3 trades have been moving and how this multi-leg execution happens with a fully automated way. Apart from that, when you go out on the insight section, you get to see end-to-end insight about this trade book. Since going through 17 months of data from the day 1 till today is a really hectic job. So what we people have done is, we people have created a smart insight section which gives you end-to-end insight on how the strategy has been moving over the period of 17 months in a very beautifully graphical represented platform. Over here, you can see the green lines represent what were the trades, whatever the profits on a daily basis, and the red line, you can see what were the losses on a daily basis. So over here, you could see maximum time this strategy has given you around 7,000 plus returns on a daily basis. Apart from that, when we people talk about PNL in percentage, PNL has almost touched 100%, and the drawdown has also, depending on the capital, it has also gone up to minus 200%. Apart from that, when we people talk about ROI in option selling strategies, so this is ROI in amount. So from the day 1, the strategy has given you 5,000 plus ROI, and then the trading capital just kept on multiplying and depleting depending on how the strategy has been moving. And today the ROI of the strategy has been around 3,29%. ROI in percentage is around 213%, similar to the ROI in INR curve. And now, if we people see, if we would have invested around 1,55,000 rupees at the start of 17 months, what would it have been today? So if I would have invested around 1,55,000 rupees from the day 1, today my wealth would have been approximately around 4,84,000, which has almost been around 4,87,000 once upon a time. But yeah, it is now at around 4,84,000, which is a very good amount of ROI, which I can expect from a sell side. and the maximum drawdown we people see in a strategy was of -3%, which was the maximum the strategy has, which is the maximum the strategy has failed on a daily basis. Which means the maximum the strategy gave you a loss was of around -3%, and post that we people could see market moving to a consolidation zone, and the strategy has been generating consistent return. Now everybody has one question, okay, how can I take this to my trading account and how can I implement this? So to implement, we guys just need to click on execute and the strategy would be added to my portfolio. From my portfolio, you could see I have multiple strategies wherein I have smart trade writer over here. Now, if I want certain custom parameters over here, suppose if I want to change the lot size from 1 to 2, wherein I want to trade with 3 lakhs of capital, I can even change my PNL tracker. So from here, where I'm expecting a 7,000 rupees profit, I can change this to 14,000 rupees profit, and I can change the risk appetite to 4,000 rupees to trade in 2 lots, 3 lots, 4 lots, multiple lots, depending on my parameters. Now, the moment I click on this, risk, the moment I click on this, all the parameters would be saved and the orders would be sent to my broker's account. I just need to click on start and the system would automatically start and it would automatically start trade, which means you need not pay attention, which means you're not supposed to sit on markets 24/7. You need not actually track each and every strike price, track open interest, track theta, gamma, beta, see the premium calculation, and actually do multiple kind of valuations to actually determine when would be the right time to enter and exit. Algo does all the job for you on the go, wherein this is a fully automated platform wherein you just need to enter the parameters and the remaining all the things happen simultaneously by itself. So you just need to click on start and the strategy would automatically start in your trading account. Apart from that, to track all your strategies and to track all your transactions, we people have a smart dashboard which gives you end-to-end insight on how you have been performing over the period of your trading session. So suppose the trading volume, you can see trading volume, what was the average PNL, what was the usage of AlgoBulls money which you will be purchasing from Aadit's platform. You could see which all strategies my money has been deployed in. Apart from that, you get to see end-to-end insight on the. Apart from that, you can see end-to-end insight over the. You can get to see end-to-end insight over this section, wherein you can see what was my average profit and loss I have booked on a daily basis, what was the trading volume I have been trading in, and etc. And similarly, you can see where and all in which all strategies I've lost my money in. Apart from that, to know more about, to actually keep a track of our trading journey overall, what we people have done is, onto the reports part, you can go out on the PNL book where you get to see when has Algo punched in the order into your account. So when Algo punches in the order, it gives you the quantity, it gives you the entry price, it gives you the exit price and exit order. So over here you get to see what was the PNL, of your each and every of the each and every order being executed over here. Now you must be wondering, why are these spaces blank and why is there no data filled in over here? So when suppose I'm an algorithmic trader and I see certain movement in the market and I wish to square off my position from the broker itself. So whenever there is a human intervention in the product, right? Whenever there is a human intervention in the trading, so we have developed such a smart system that if at all Algo detects any human intervention in the strategy, Algo would automatically stop the strategy, square off all the positions depending, and won't send any further repeated orders to actually know. So like on our platform, you can if you have directly squared off the position, though which is not recommended, but if you are squared off the position, Algo is not going to again re-enter the position at profit or maybe at loss because of certain parameters. Similarly, to know end-to-end thing, similarly to know each and every transaction, to keep a track of our taxation part, to keep a track of our trade book tallying, what we people have done is each and every order punched in from Algo, we people have attached an Algo ID to it, and we people have attached a broker ID to it. So on a daily basis, if you want to tally the trades going in from Algo account, you can directly just copy it from here, search it on the Excel sheet of your broker's contract note, and actually see, okay, these were the orders which were actually sent from algorithmic trading, and this is my current PNL on daily basis. Now, suppose if you haven't linked the broker on the first part, you can directly go out over here and you can link the broker directly from over here. See, you can see Alice Blue being the prime partner. You can enter in your client ID, password, year of birth, and then you can directly sign in with Alice Blue. So now, I have already, so now I think so all of us have a better understanding about how this markets move and how we can actually redefine our trading experience in this new year of 2022 with algorithmic trading. And for this, I would be dropping in the link. I would be dropping in the link of Aadit Shah. For this, I would be dropping in the link of Aadit Shah. I would be dropping Aadit Shah's exclusive link over the chat section from where you can directly utilize, from where you can directly get in touch with Aadit and actually use the platform. Apart from that, we people also help you in building strategies. We people also help you to automate your own trading experience. So in the case, if you have any trading strategies, or in the case, if you want to build and develop certain strategies for yourself, we can help you with that. You can directly get in touch with me and I'll be happy to help you with that. To join the revolution with Aadit Shah and actually start your smart trading and smart investing journey, you can directly sign up on algotech.algobulls.com and actually log in directly log in with Alice Blue to actually enjoy algorithmic trading with full automation. Any closing note, Aadit?
Nothing as such, Yash. You have done a wonderful job of explaining everything that needed to be explained. Now, should we just open the final segment to the participants for any questions if they may have?
Absolutely. So I could see a question from a participant. So the monthly subscription is 6,500 rupees. Am I correct, Aadit?
Yes, you are. That's exactly what we have offered at the moment.
Yeah, so the monthly subscription is around 6,500 rupees. We people do you can directly go out on the white label solution and actually go through the offer and in case if you want to connect with Aadit, I think so Aadit, you can drop in your email ID or two for clarity part.
Anybody who logs in my white label, I can easily contact them from my end here. It's not a problem at all. So, sir or madam, I will be seeing you soon enough.
Absolutely. So yes, you can directly log into the platform and in case if you have any question, Aadit Shah will get in touch with you and you can directly contact him. In Q&A side, we have a question on risk involvement in algorithmic trading. Yes, so talking about risk involved in algorithmic trading, I think so me and Aadit, both of us would take 50-50 part of this question. So I'll tell you, algorithmic trading doesn't guarantee you profit, firstly. Second part about algorithmic trading is it is not a machine. It is not a profit making machine or it is not a profit making machine or it is not a currency printing machine. So what algorithmic trading does is, suppose you code a system or you code a system and you actually follow a system of an expert. So it helps you trade systematically with the best risk involved with the strategy. So over the platform, as I showed you there as over the solution, I've showed you what the risk is involved in algorithmic trading. Over here you can see. So these strategies have a risk involvement of 17% drawdown. This is the kind of risk involved in this kind of strategies. This is the capital requirement risk involved in the accuracy of the strategy. So over here you can find you can actually determine which risk appetite suits you the best and what kind of risk appetite suits you the best, based on which you can select the strategy and you can start trading based on your expertise and your experience. I think so that answers the question. And we are also running out of time. So I would like to thanks Aadit for actually joining us on this webinar on a 31st morning, and actually having such an interactive session on algorithmic trading and risk management. So thanks Aadit for joining us on this webinar, and thanks to all the attendees to join us on this webinar during the live market hours. And I hope you got to gain a lot of knowledge about option trading and actually risk management. So I would like to thank everybody to join us on this webinar, and looking forward to see you in the new year and join the algorithmic trading trading move. Thanks everybody.